Hi guys, this is Tyrone from FX Evolution on Friday the 28th of February. Well, boy oh boy, we've seen some movements in the market this week. It's been really volatile in a lot of the indices and a lot of the currency pairs. So we jump straight into the charts and start analysing what has happened over the last few days. So we'll start, as we always do, with the Aussie USD. We can see here on a daily chart that it's breaking to new lows again. We talked about this at the webinar, of course. We're fully expecting that there's just no support present even on the daily chart here. So if we go to a weekly or even a monthly, it's going to take a monthly actually to get that support line up that we need. That's around that sort of 63.50 to 63 area. So a little bit of work to do to get that low, but in saying that, it's falling at the rate of knots. And you can see here the last few days of just heavy selling pressure has just come in. It's broken that obvious support line here, retested it, and then just smashed down. It isn't even coming back to find any sort of resistance at the 20 at the moment. It's just outpacing the moving averages, which is what often happens in a very fast moving market. MACD is not indicating any signs of going any slower. So at this point, we're just basically waiting and seeing. It's not, if you're not already in, it's a difficult one to get into until it does have a bit of a pullback, but I'd be looking for pullbacks to get into this one and probably joining in the short. Certainly no longing opportunities until we see a short-term change of trend. Okay, we'll go over to the USD CAD. We can see here finally we've got the break of this resistance level. We've broken out well and truly. You can see the last 2 days have been very heavily bought. This has been a really strong move out of this little mini channel, and that resistance is well and truly smashed now. So again, look, it's fast approaching the area where it's going to find a bit of trouble, which is only about, it's still 100 pips away. So I mean, it's still a little bit of room to go, but it's definitely going to start running into trouble around this area here. You can see through here that it's going to be one of those ones where you need to keep an eye on if you're going to go any longer. But yeah, again, look for any retracement for an entry point. I wouldn't mind seeing this come back even all the way back to the initial break, which would cause an amazing role reversal. Really, it'd be great to see that pull back to that level. Not sure if it will, but if it does, it provides a great opportunity to go long and test this higher level. All right, we'll move on to the USD Swissy. Okay, it did pretty much as we expected it would. It found a pretty serious level of resistance here, which was one support. We mentioned that last week. We can see we've got the candle that we thought we were going to certainly reverse on, and it hasn't let us down. It's been pretty solid short for the entire week. This is again a daily chart, so every candle here is representing 1 day. We can see that it's been a very heavy sold off pair, this one, especially yesterday. So it's approaching that level where it could certainly find some support. This is obviously a pretty clear support zone now where this line is here. So yeah, definitely one to watch, but probably look for a change of trend if you want to go longer again. We've obviously got a very clear target of where we need it to go if we are going long. But at this stage, we want to see a little bit more of a change of trend on a smaller time frame before we get excited on this one. But there were plenty of shorting opportunities from up this level here. Hopefully some people got on board with that one. Okay, the USD yen has been another interesting one. We saw that big move, obviously, from last week, but it's been nothing but selling ever since. We've dropped well and truly through all of the previous resistance that should have been some form of support. We can see here that the support was there before it actually broke through, but it came through and broke that line like it was nothing. Now, obviously, this is being driven by more than just technicals. This is actually reacting to what the indices are doing around the world, and more importantly, obviously, the S&P 500. So we've broken down below the 109 now, only just below the 109. Obviously a very serious level. If it doesn't find support, we're probably looking for the next support zone, which is around here, probably around that 108.50. Failing that, if it happens to break that zone there, it's got a little bit to fall again, basically down to 107.20. So yeah, one to watch. Wouldn't be getting involved in any long action here now, not until we get a very clear sign that it's going to potentially reverse. It could certainly bounce from these levels, but I would be thinking if it was going to bounce, it would be from around this level here, which is around probably the best part of about 20 pips away. So 20 to 30 pips, you can measure that line there, and yeah, that's probably the next place we're going to find a bit of support, and we could potentially take a long into that resistance zone again and see what happens. All right, the S&P 500, the big fall. Okay, so this has been the one that has been, pretty much leading the way for all of the indices around the world. We've had, 5 days now of very, very serious selling. As you can see, it's approached some serious levels now. We've broken well and truly through the 30-20, which we would have thought would probably have held it. Didn't even blink. It just went straight through, and it finds itself now at, just sitting around that 29 sort of 40 level. Bit of a look. It's definitely at a place where it was previous resistance, but how much you can read into that? I mean, it wasn't there for very long, and because this was in uncharted territory even when it did break through this level. So yeah, if it's going to bounce, I mean, it's probably going to bounce from here. Obviously, all of the indicators are very heavily sold off. It wouldn't surprise me to see a bit of a retrace to probably one of these key levels. But now I would be thinking that the 30-20 might actually even act as a resistance zone now that it broke through so easily. I would almost expect it would probably retrace up to this level here and potentially find that hard to break through again. And look, more than likely, the short could well and truly continue. There's no reason to think that this sell-off is over, but it'd be difficult to imagine that it would continue to fall without some sort of a retrace back to around this level here. So it's probably just a watch and see on this one, and let's just see if we can get that sort of 80-point move up to try and get a reversal here and maybe a continuation with the trend. But this has been a very, very short and sharp fall. Obviously, we can see that very, very clearly. Okay, we'll move on to gold. So gold has let us down a little bit, really. Like, we probably, with all of the action that we've seen in the indices, we would have expected gold to have probably broken to new highs. But it's been a little bit of a struggle for it. It seems to have found its base here around that sort of 1630 to 1645 level. Hasn't been able to break through past that. So certainly one to watch. I certainly wouldn't be shorting it anytime soon, but it's not giving us any indication that it's going to do that. But in saying that, the smaller time frame change of trends are going to be the key here. Probably watching the 4-hour or the 1-hour charts to see if we can get a clear series of higher highs and higher lows to go long, or indeed lower highs and lower lows to go short on this one. But a little bit stuck in a bit of a zone that's struggling to break through. I would have liked to have seen this already break up higher given all of the action that has gone on in the indices and the dollar. So yeah, not filling with a great deal of confidence. Okay, the dollar index is the one we'll look at next. We've got it's been a big sharp pullback all the way to this roll reversal area. We had trouble breaking through there for a while, but you can see now it's already probably broken a little bit lower than it anyway, around that 98.10 level. We can probably lower this line, really. It probably makes more sense that it's right on it there. I would like to think that we'll find a little bit of support here, which is probably going to go on to the next trade that we're going to look at, which is the euro. I'm thinking that obviously they work very inversely, these two. So, given that this has come back to a very serious place of resistance, which should now be some sort of support, you can see here and here that it was definitely a difficult path to get through. It's come back to it now. We can probably draw a fib there. It'll be a 38.2. I can almost guarantee it. We'll pop the Fibonacci line on it now just to make sure. As you can see, straight on the 38.2, which provides another reason to potentially reverse this one and start sending it long. I can't expect that it would fall much sharper without even some sort of a pullback. So certainly one to watch, and it does make sense on the euro trade, which we're going to look at next. Okay, so the euro is basically the complete opposite. We've seen that euro strength that we were talking about the other day continued on. It's pushed right through the 109, straight into the 1010 zone, literally touched it. Now we can see here, obviously we've got a very serious level of roll reversal again. We've got the touches here. It's going to take a little bit of work to break through this level. I can't imagine that it's going to do it on the first go, even though it did break through the 109 without even thinking about it. The 110 I think is going to pull it up a little bit sharper because it has been support for some time now, well into last year. And with the other, the index that we were looking at, the dollar index, being at the opposite scale and sitting at a support zone, I could easily see this pulling back. I'm not convinced that this is done on the long. I'm just thinking that it's probably going to find quite a bit of trouble getting past this level without a reasonable sort of pullback. I'd be probably drawing a fib on this one as well. Probably looking for a 38.2 pullback, which would be our ideal level, which would be around that probably 19 sort of 20 area. That'd be a great pullback. Wouldn't want it to go any deeper than that. That would also coincide with the roll reversal zone over here, and that would hopefully find support and potentially push on to new highs to find probably the 200 would be the logical target. Break the 110 and get into the 200 moving average, which is probably going to be the next serious target at around the 111. All right, so I hope everybody's had an awesome week's trading. There's been some huge moves this week, so hopefully everybody has been able to take part in some form or another, get hold of some of those trends and basically follow them through, or look for the pullbacks if you haven't been able to get involved yet, because I don't think the volatility is ending anytime soon. Have a great weekend, guys.